How do IPOs change a company's shares outstanding? Imagine a company that wants to grow and needs more money to do so. One way to get that money is through an initial public offering, or IPO. When a company goes public, it offers new shares to the public investors for the first time. This means the total number of shares the company has increases. Shares outstanding are all the shares held by shareholders like investors, insiders, and employees, but not the shares the company keeps in its treasury. During the IPO, the company creates a specific number of new shares to sell. For example, if a company had 10 million shares before the IPO and decides to sell 5 million new shares, the total shares outstanding after the IPO will be 15 million. This process adds to what was already there and gives the company fresh capital. The money raised can be used for expansion, research, or paying off debts. But there is a trade-off. When new shares are issued, the ownership percentage of existing shareholders gets smaller. This is called dilution. If you owned a certain percentage of the company before, your ownership now spreads over more shares, reducing your slice of the pie. From a stock trading point of view, this increase in shares impacts some important numbers. Market capitalization, which is the current share price multiplied by the total shares outstanding, will go up because there are more shares. Earnings per share, which is the company's net earnings divided by the shares outstanding, will decrease because the same earnings are now divided among more shares. Options and warrants are also affected. When employees or investors exercise their options, they buy more shares, which increases the total shares outstanding further. This is called fully diluted shares. Traders need to keep this in mind because it can affect the value of options and the ownership percentages. So, in simple terms, an IPO makes a company's total shares grow by issuing new ones to the public. This helps the company raise money but also spreads ownership thinner. It changes key figures like market capitalization and earnings per share, which are important for investors and traders to understand.